Bitcoin recovers to 21K as Fed commits to slow inflation and traders remain cautious. I want to say thanks for all the super chat stickers. Make sure you hit that like too while you're down there. And the super chat stickers apparently help the algorithm a lot, so I appreciate it immensely. Boom. Fed Chair Jerome Powell said the agency remained committed to reducing inflation and increased interest rates by 75 basis points earlier this week. We talked about it yesterday. I believe, actually, I pulled up the wrong... No, this is the right one. This is the updated one. Okay. Bitcoin rose above 21,000 in European hours today as broader financial markets in Europe and Asia advanced after Friday's open. The recovery followed a record 9-day slide that caused the Bitcoin price to fall from 31,000 in early June to just over 20,000. Bitcoin has slumped almost 70% from a November lifetime high of 69,000 US dollars. Among equity markets, Hong Kong's Hang Seng rose about 1.1%, and Shanghai Composite added nearly 1%. German DAXs gained 1.41%. And the stocks Europe 600 advanced 1.22%, while the U.S. index futures also gained. The recovery in markets came as traders assessed the long-term impact made by Wednesday's U.S. Federal Reserve decision. Fed Chair Jerome Powell said the agency remained committed to bringing down inflation and increased the interest rates by 75 basis points, causing a brief relief rally in global and crypto markets. Quote, although a 50 basis point hike was anticipated for many weeks, last Friday's inflation data forced the market to price in a more aggressive hike with huge sell pressure. Marcus Soterori, I don't know, I apologize, I can't do it. An analyst at crypto broker Global Block said in an email, therefore a 75 basis point hike was priced in for the short term, leading to a rally. He also added that there could be more downside in the next few months after this week's rally cools. This is due to concerns around an earnings recession on the horizon as a result of the Federal Reserve's aggressive monetary policy. According to Bank of America, stagflation fears are the highest since 2008 and profit outlooks are the worst since the GFC, global financial crisis, too, he said. The negative environment could cause an uptick in foreclosures and bankruptcies. I posted a little meme on the locals page, I believe this morning, and it came from, I believe, Mr. Elon Musk. I don't recall exactly, but I had seen it over there. I'll show you guys this real quick. This is a meme that says stocks, cryptocurrency, and now the Grim Reaper knocking on the door of real estate. There's one decision I made that a lot of people give me a hard time about in this current market, and that is that I did not purchase a house. I rented a house, and the reasoning for that was because obviously the housing prices were high. Now, you could say that was a mistake in general, but I also signed an extremely long lease all the way until I can get into the next bull run cycle, and that locked me into pricing on rent. Whereas when you're dealing with mortgages rates, and especially like unsecured mortgages or that sort of thing, you can put yourself in a really nasty position. So that was one thing that I did that I think was probably beneficial for now, because I do worry that we are potentially going to see some real estate issues, right? That being said, let's continue. The negative environment could cause an uptick in foreclosures and bankruptcies. Susanna Streeter, senior investment and markets analyst, Hargreaves Lansdowne, seconded the sentiment. There is unlikely to be sustained relief from the sinking feeling that has hit financial markets this week, she told CoinDesk in an email. After the initial boost of optimism that the Federal Reserve was going to get a handle on inflation with a 0.75% rate rise, the mood soured on Wall Street as concerns mounted that the price spiral was going to be an even harder nut to crack without fresh aggressive hikes. Some, like Alex, an FX senior market analyst, maintained a bearish outlook for Bitcoin in the short term. The bearish focus remains on the $20,000 level, the former peak of 2017. Oh, are people actually calling this now the way I talk about it? If we're talking about the halving cycle, what do we expect? We expect the bottom of the next cycle to be the top of the previous cycle. The top of the previous cycle was around $20,000, and now that would be where we sit at the bear market until the next halving happens on Bitcoin in 2024. The analyst added that uncertainty surrounding cryptocurrency fund Three Arrows Capital could result in contagion risk amid growing speculation about its possible bankruptcy. The fund is said to have faced at least $400 million in liquidations after failing to meet collateral requirements on its levered positions, as previously reported. Once again, what I think you might see is we could see a complete destruction of the rest of the cryptocurrency market and Bitcoin just standing there all by its lonesome. That is a possibility. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.